This is a lecture from OpenTuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Okay, this lecture is on chapter 18 of the free lecture notes and it's on behavioural aspects of budgeting. What we're concerned about is the way budgets are used, or should be used, to motivate managers. When I went through in the first of the lectures on chapter 17, I said one benefit of budgets is to motivate the managers. Well, we're talking about how managers are affected by the budgets, how we do motivate them. And you'll see in section 3, it says factors that influence motivation. The first one, the three factors of the following 3 sections. The first of which is participation in preparation of budgets. Participation. Basically, there are 2 standard approaches to preparing budgets. One approach, which used to be very popular, is that the budgets are prepared by top management and simply given to the lower managers. So the managers are called in and, human resources are told, this is your budget for next year. Sales department, this is your budget for next year, and so on. Now that is called top-down budgeting. I'm not going to write a definition simply because it is typed there, but it's where the budget is imposed on the managers. The alternative, which is much more popular these days, is what we call bottom-up. And bottom-up budgeting is where I get my managers to prepare their own budgets. Sales manager prepares his budget or her budget, human resources prepares their budget, and so on. My job is to make sure that they coordinate, that everything fits together, and to approve them. But the point is, the managers are involved in preparing their own budgets. And so, bottom-up is more participatory. The managers are involved. And as a result, we'd expect them to be more motivated to try and achieve budget. If I just say, here's your budget, do it. Well, there's not really much motivation. The second thing that needs considering is the impact of targets. Because the budget is what they're going to, managers are measured against. The budget effectively acts as targets. And so we've got to make sure that although on the one hand the targets are demanding, we want managers to do better, but it's desperately important that they are achievable, that they are realistic. There's no point in giving them a target which is impossible for them to ever achieve, because they won't even bother trying. So it's got to be a target that, is demanding, but that is realistic, it is achievable. And finally, the third thing to consider in motivating them is incentive schemes. You're giving them a target. Surely, if they're going to be motivated, you want to have some sort of reward if they do achieve the target, if they beat the target. And there's no rules here, but you can see there, we're giving several ways, such as a promise of promotion. More likely, I think, an increase in salary or a cash bonus. Or, quite commonly, senior managers give them shares in the company by way of bonus. So those are 3 ways of trying to motivate them. Reward them if they do well. Make sure the targets you set them are demanding but achievable. and involve them in the preparation of the budgets in the first place. So that's it. It was a short chapter.